Hello and welcome to Dukascopy TV for this final day of the trading week. I'm Ben Jones, bringing you Friday's edition of Forecasts. Joining me on the line to share her projections for the sterling New Zealand dollar pair is Sasha Nugent from Caxton FX. So Sasha, in 1 month's time from today, you expect this pair to be trading at 1.90. Can you explain why this is?
The most obvious explanation at the moment for me is the fact that the RBNZ has already started tightening policy. We saw them raise their interest rates. And if we look at the trends over the last few weeks, since the point they've done that, we can see that the downward trend in this rate has already begun. Also, I think that we will begin to see the pound weaken due to markets getting ahead of themselves in terms of rate hikes from the Bank of England, and I think maybe the strength of the UK economy might ease a little bit from levels that we've seen before.
Now, you see a further reduction in this pair 3 months on from now, going down to 1.87. What brings you to this figure?
Again, it's pretty much a similar story in the sense that, again, that we need to take into account the fact that the Kiwi is vulnerable to risk appetite. And so obviously, depending on what happens with the Russian-Ukraine situation, it might not necessarily pan out like this. But putting that to the side, I think what's key here is, again, I think that the market will kind of shift away from sterling, again, because of the whole idea that maybe inflation as well. We've seen how inflation's dropped considerably in the UK over the past few months, and I think maybe inflation will become a problem, and that will lower expectations for any rate hike from the Bank of England sooner than the first half of 2015, and on the back of most probably stronger growth in New Zealand, that will kind of continue the downward trend in the rate.
And finally, in 12 months' time, you see this pair hitting levels similar to what we saw in February, 2.02. Why do you think this will go back up?
I think 12 months from now will be in 2015, and the key thing here is if we look at language from certain Bank of England members, we know that they have said that there's probably about 1% slack in the economy, and there is some talk that by the time we get to this point next year, we would almost be at the point where we've absorbed that slack. And so I think that, again, the whole interest rate increase talk will come into play. And I think we might even possibly have the Bank of England do so. And so just to get the market talking about the prospects of this, whether it happens at this point next year or whether it happens in the following few months, just the talk about it will get sterling back on the front foot, especially if we've seen some nice growth figures at the end of this year, and some positivity from the central bank as well.
Sasha, thank you very much for joining us today. That's all from me for this week. Make sure you click back to Dukascopy TV next week, as we have plenty more updates and exclusive interviews for you. Goodbye.